Hello and welcome to another installment of Macro 2.0. With me as always is Barry Nielsen, a chartered financial analyst from Opportunity Bank. Welcome back, Barry.
Thank you.
Over the last couple of episodes, we've talked about the Federal Reserve, the role of the international role of the U.S. dollar. We've talked about inflation. Today we're going to talk about debt and deficits. We're going to save the trade deficit for a later episode. So now we're really going to focus on the aggregate debt of the United States, governmental and other types of debt, as well as the seemingly endlessly recurring federal deficit. And what we want to try and better understand is how those two things relate to one another, what distinguishes one from the other, and whether we should be worried about or care about it. Mm-hmm. And before I let you launch into this, I went just today and looked at, the Politico's list of the 10 most serious issues on the political agenda. We're in an election season, so there's a rank. And debt and deficits doesn't make the top 10 this year. Now, in my adult life, it's always been up there, but things have changed. So let's get started and first talk about, what is the debt, the national debt, and why is it important?
Sure. Well, first of all, let me express a view. With you, for most of, or in my entire adult life, the federal debt, the annual deficit, has been a big political issue. It's as if both political parties seem to have thrown caution to the wind, if you will, over the last few years, and the deficit continues to rise on an annual basis. The size of the deficit and the federal debt, total amount of debt outstanding, continues to rise. So I view that as concerning.
Yeah.
And again, I don't believe that is limited to one of the political parties. It's both parties. But going back to what you just said, the definition of the federal debt is the amount of dollars that the U.S. government, the United States, owes to creditors because we have borrowed money to finance annual deficits where the federal government on an annual basis spends more than they take in tax revenue. And I guess I should mention that federal debt and the deficit on an annual basis is financed through the issuance of U.S. Treasury bonds.
Yeah. And about nearly half of the outstanding debt today is to foreign creditors. I think that is a difference in the current situation from the past. We didn't always rely so much on other countries, other foreign investors, maybe not necessarily foreign governments, but we do know that foreign governments do buy our bonds. China, for example, has a huge tranche of U.S. treasuries, but also just private foreign investors, banks in other words, they buy these bonds too. So the debt is the result of the accumulated deficits, and it keeps going on. I can't remember when we last had a balanced budget. It might not have been that many years ago.
The late 90s, I believe, yeah.
Well, at some point, as householders, business people, we know there's got to be a limit to borrowing. We all know that what it feels like to have borrowed too much because we struggle with servicing the debt, paying that on a monthly basis or a quarterly basis. We have, the creditors need to be paid back. At least we have to pay the interest on that. So let's just talk a little bit about what is the upper limit? Is there even a theoretical upper limit to the amount of debt the United States can have and the number of years it can run a deficit, without ever paying people off what we owe them?
Before I maybe talk a little bit about that, I want to go back to something else you just said about the amount of our debt, U.S. Treasury bonds, that are held by foreign entities, and tie that back into other things that we've talked about over the last couple of weeks. One of those being the dominance of the U.S. dollar in global finance. again, in the United States, we're in a very fortunate position that our debt denominated in U.S. dollars is demanded by and held by foreign entities, including foreign governments, as you mentioned, because it's viewed as a safe haven investment, for one. Our currency is stable, as we've talked about over the past couple weeks. The U.S. dollar is the world's reserve currency. Those dollars that are held at foreign central banks are actually held in the form of U.S. assets, primarily U.S. Treasury bonds, those bonds that are issued to finance our federal debt. So again, I kind of just want to make the point that all these things that we've been talking about over the last 3-4 weeks are very much tied together and interrelated. And our U.S. federal debt and the bonds issued to finance that debt is certainly related to all those other things that we've talked about. And to address, to move on a little bit, to address your question about is there a limit to the amount of debt that can be issued. Let's think about that first of all, maybe not at the federal level, meaning federal debt, but corporate debt, household debt. Yes.
somewhere there's a lid.
There is. I mean, if we think about it at the household level first, I mean, debt is leverage, and leverage is risk. And if you're going to take on leverage, you better be able to manage that risk. And that applies to households and corporations. I'll use, at the corporate level, I'll use a bank as an example. I mean, at my bank, at Opportunity Bank of Montana, we devote a great deal of resources, effort, expense, and expertise to managing debt. On both sides of our balance sheet, a bank takes in deposits, which is really borrowing money in the form of deposits or CDs and other debt, and then we make loans. And both those deposits and those loans have interest rates, and the direction of interest rates, the level of interest rates, the spread between interest rates. That's how banks make money, something we call net interest margin. You better be able to manage all of those things in different interest rate environments to manage your assets and your liabilities, to manage your debt. And not only does that apply to a bank, but corporations who issue debt to finance the purchase of plant and equipment and to hire workers. Well, they better be able to manage that debt and make those interest and principal payments, and the income and cash flow they generate off of the projects that debt finances better cover their interest expense and eventually their ability to repay or refinance principal amounts. And that goes for a household as well. Whether it's a car loan or a mortgage loan. We learned, many borrowers learned the hard way in the great financial crisis, 2007, 2008, 2009, that maybe they didn't understand the terms of their debt.
Right.
Or they didn't understand the impact that a different interest rate environment would have on their mortgage. And they certainly made poor assumptions about home prices, the rate of home price appreciation. Debt is great. We need debt. This country can't function without debt. The economy relies on debt. As we've talked about in the past, even the Federal Reserve tries to manage or does manage short-term interest rates, which dictates the level of borrowing and lending, debt, to manage our economy. So debt is hugely important to our economy, but you've got to be able to effectively risk manage debt. And that applies to the federal government as well.
Yeah, so I'm glad you got us to that point. It seems as if because of the United States' relative strength in the global economy, and especially with respect to the strength of the dollar, people are always investing in U.S. assets. They're trying to store up U.S. dollars one way or another. It's the safest bet on the planet, the United States and its dollar. And yet, the government, as distinct from households and companies and banks, doesn't seem to be an assiduous manager of debt. In other words, it seems to be, and I don't make this, this isn't a political statement, it's actually just a citizen view of how can this keep going forever and a day, and I'm exaggerating, without a day of reckoning. Will there ever be a time when the creditors, our country's creditors say, whoa, that's enough. We don't have confidence, as much confidence now as we used to, or we have an ulterior motive to do damage to the United States. And as a creditor, if I, government of China or someplace else, dump all these treasury bonds, what happens? And so I'm trying to articulate, not very well, a concern about the government's behavior doesn't seem to be disciplined by the same factors that ineluctably enforce effective debt management in the private sector in our household existence.
Well, yes, because how do we repay our debt? How do we make interest and principal payments on our debt? Through tax receipts. And the world has confidence in the U.S. government that we'll always be able to pay our debts because the U.S. size of the U.S. economy, the strength of the U.S. economy, and the federal government's ability to raise taxes, not necessarily raise taxes higher, but to collect tax revenue,
yeah,
and actually, I guess, to raise taxes in order to make payments on our debt. Is there a limit to that? Yes, there is a limit to that. I don't know what that is. Sometimes I think it's a less dirty shirt scenario. The rest of the world, most nations are not in much better situation than we are, quite honestly. Some are in much worse. But yeah, there's got to be a limit to that, and a limit to foreign investors and domestic holders of U.S. Treasury debt as to the sustainability of our federal debt and and deficits that continue to grow on an annual basis.
Yeah, well, I'm glad you mentioned other countries, among them Turkey, Brazil, China, India. These emerging markets, these giant countries with huge populations, their indebtedness on a ratio of debt to GDP, is much higher than it is in the United States. Although ours is getting, to me, worryingly large as well. And I'm glad you mentioned the issue of taxation. I mean, people trust that the United States will manage itself, and the government will impose taxes, raise tariffs, other things to generate revenue. People are even talking about selling assets. A lot of countries in the world sell off assets to generate the revenue to pay their debt. And that's becoming a bit of an issue even in this country. But that leads me to think out loud about the conventional wisdom, as I understand it, is in a time of economic stability and growth, which we are experiencing right now. That's the time when a government normally would seek to reduce its expenditures or raise taxes in order to pay down the debt. Reduce the deficit and pay down the debt. You do it when the economy's on a roll, not when it's in recession. Here we are on a roll, and expenditures are going up appreciably, and tax cuts are happening rather massively. The net effect being to raise both the deficit and the debt simultaneously. That creates a concern, and then again, well, who's gonna call the bluff? Who's ever going to say, that's enough already? You have to turn this around. You have to start acting more responsibly by cutting expenditures or raising taxes or doing both, or reforming things in a way where you can actually service the debt effectively without punishing too many people.
Yeah, let me quote a couple statistics along those lines, because I share your concern there. First of all, you're absolutely right. when the economy is strong and growing, you would expect the annual deficit to be shrinking, to be smaller than it was last year if the economy were growing.
Yeah.
One statistic I saw recently, employment, historically, the level of employment has been very correlated with the size of the annual deficit, meaning that when employment was low, the annual deficit shrunk by a percentage amount, some percentage amount. Over the last couple of years, the exact opposite is true. Even though employment has been, has dropped, unemployment, I should say, has dropped to historically low levels over the last, we'll say 3-4 years, the size of the annual deficit continues to grow. That has broken a historical trend that has been in place for decades. That's a concern.
Yeah.
The other statistic that I saw that's of concern is there's something called the marginal productivity of debt. And this is part of risk management when we talk about debt. If you're going to leverage up, whatever you do with those borrowings needs to be productive.
Right.
And 40 years ago, for every dollar of debt, new debt created, $4 of additional gross domestic product, which is, again, the broadest measure of the size of our economy. For every dollar of new debt created, GDP went up by $4. So that has shrunk to 40 cents for every new dollar of debt issued. And that includes both federal debt and corporate debt. But debt is not being deployed as productively today as it was 10 years ago, 20 years ago, 30 years ago, and certainly 40 years ago. That should be of concern.
So it's sort of like what should be happening is sort of like the multiplier effect of spending also applies in borrowing and using borrowed dollars. If you use them well, it should generate more than the dollar that you borrowed.
That's right.
Okay, and there's an inverse relationship happening, or almost that. And do we know why? Or
well,
I'm sure there are theories, but
it goes. I think there's a couple of things there. First of all, productivity in general has been low over several years, recent years. Mm-hmm. Meaning, the amount produced per hour per worker. That has fallen, and following the great financial crisis, we'll call it, and has not recovered. Certainly, if productivity in general is low, debt that is used to hire the workers and plant and equipment, if it's not producing like it should be or could be, that's a problem. Another thing that comes to mind for me is that much of the debt that at the corporate level, at least, that has been issued over the last several years has not gone into investment in future production and output, but rather to repurchase shares.
Yeah.
Okay, so you take shares off the market, it drives earnings per share up, increases shareholder value for those that own shares, but it's not building for the future, and that alone right there should also be of concern. I would say also that in general, what you do with the debt, and again, this is all related, whether is it millions of consumers and businesses making individual decisions in a free market that allocate capital efficiently, allocate those funds that were raised through the issues of debt efficiently to efficient business ventures that are successful and grow the economy and hire workers and increase GDP? Or is it, I don't know how else to phrase this, but we hear about pork barrel spending in Washington, things that get slipped into the budget, or some bureaucrat that's making a spending decision. Are those as efficient as if you and I had our dollars on the line starting a business? I don't think they are.
Yeah.
So it's a matter of how efficiently resources are allocated, scarce resources, and the revenue and the borrowings of the federal government. Are they being allocated efficiently?
Yeah.
Well, some of the statistics say no. Sorry to cut
No,
you.
I understand that line of logic, and I'm not going to quarrel with it. We're, as always, fast running out of time. I want to drag us back to two things. One, I just want to mention that one way that the government deals with its increasing indebtedness is that it raises the debt ceiling.
Oh, yeah.
So that seems to be working. It doesn't strike me as wholly responsible, but if you're running out of time and the creditors are barking at the door, you just raise the ceiling that you allow yourself, so you just borrow more. And and it seems to me, as long as the world accepts that, the creditor world, inside this country and out, that keeps happening. The other thing is, and this is where we're going to have to end in a few minutes, is last time we talked about inflation, and one way to deal with debt is to inflate the currency, create more money and start paying off your debts with fabricated money or fiat currency. And what would you say about that? Is that the logical, sort of pragmatic approach that you might anticipate going into the future, that if there's enough pressure on the United States to be responsible, then the response will be, well, we're the world's reserve currency, let's just print more money. We're still the safest bet in the world. Let's start inflating and deal with it that way.
Well, that should be a concern of everybody. And no country's currency has held the status of the world's reserve currency for century after century. I mean, there were the Romans, there were, I think, the Dutch at one point, the Spanish, pieces of 8, and then the British, and now the U.S. Those were all, at one point or another, world reserve currencies. Those past greatness of those currencies faded. That is and should be something that everybody thinks about here in the U.S. It is a concern, especially just real quickly. I mean, it's an ancient history now almost, but Standard & Poor's, which is a debt rating agency, in 2011 downgraded U.S. debt, and that created a lot of turmoil in markets. I don't know where we go from here, but yes, we should be thinking about it.
Yeah. So someday, somehow, there will be a day of reckoning. Decisions will be taken that will result in some kind of disciplinary phenomenon.
Well, whether the market, whether the market forces it upon us, our government, or the government itself gets control of things. It's either going to be the global marketplace, or we're going to have to get control of it, because it's on an unsustainable trajectory currently, no doubt.
That's a good place for us to end. You get the last word. So thank you for watching Macro 2.0. Join us again next time. We're going to move on to talk about the market and delve into your expertise in stocks and bonds. So we'll see you again next time.